All right, how's everyone doing? This is Hala Pablo. Hope everyone's having a good Saturday. Thank you for tuning in. Let's continue to look at Bitcoin right now. I think Bitcoin's the most important thing we need to look at since so many altcoins and tokens are, like it or not, are indexed to its price action in some shape or form. And so where Bitcoin goes, the vast majority of the alts go, at least for now. I wanted to just focus on the mat on see like now my last chart, my last video that I put out. If you watched it a few days ago, we focused on this chart on top, which is a logarithmic macro, which is a 2 day. And as you can see, we trace these bear and bull cycles that we've had since 2017. This buying climax where we peaked out at 19.2, and we traced it all the way through these Elliott waves and corrections on the macro, all the way to where we currently sit, where I believe we just had a counter trend. That top that we had back in March of earlier this year, where Bitcoin made its all-time high, I believe that was a counter trend top, and indeed it went over the top that it had back in May of 21. But nonetheless, on the logarithmic scale, it's only reached channel midpoint, which is normal, and it is now retracing. It's kind of like a similar pattern that we had back at this counter trend. You see this Elliott wave cycle, or this complete Wyckoff schematic here. I call them little Christmas trees. The one that we had starting back in March of 19, and then mitigating the lows in March of 2020. And so we kind of see that here, where we had the low here back in December of 22. We had a little mitigation on this low along the macro trend support line, but then we had the counter trend and a sell-off since then, and then I drew this sub-Elliott wave, impulse wave here. Some people, some Elliottians will contend that we are in a 4 wave and then a 5 wave is coming, and that is possible. The 5 wave could be truncated. I don't see the 5 wave being anything more than a truncated 5 wave. Certainly not an expanded 5 wave. Although with Bitcoin, ultimately it is a beast, and Bitcoin often bucks the trend and does. Let's be perfectly reasonable. It does whatever it wants to a lot of the time, just because of the FOMO dynamic. Right now, it's the most sought after, precious, valuable asset on planet Earth right now, really. And so when Bitcoin gets a pump in, there's no telling what it can do, and it could certainly go beyond the channel midpoint. But within reason, I think it's still going to obey the governance of the Elliott waves, and it just made that last 5 wave maybe extended, and that's okay. I think it is inevitable that profit will be taken, because all of these gains are, as of yet, that we've had from December 22 to the all-time high here, have not been mitigated, profit has not been taken. We see that the market makers, every time they make a top, they take at least a 50% sell-off. So this first one was an 84% sell-off, and then this counter trend that we had back in July 19th, after it hit the channel midpoint, this was a 72% sell-off. That went all the way down to the COVID. That was the COVID lows. It culminated back in had a terminal shakeout back in March of 20. But even if it hadn't been a black swan event, the macro trend support line would have hit, which was 52%. So that's more than 50%. And then it came back up 1,600% pump, but that was necessitated from these COVID lows. See, the rocket fuel was built up. This is part of what I mean. We have to go down and take profit. They have to shake out. They have to generate liquidity, and that fuels the next blast off. And then from this top here, after the 1,600% pump that we had back in April of 21, we had a steep 77% sell-off. And then from there now to where we've had the all-time high back in March of this year, that was a 360% pump. But now we've only retraced 30%. So we're about halfway down now. Indeed, it's about 40-something% to the macro trend support line, which I see this thing going to eventually. I just think it's inevitable to have that macro mitigation along the macro trend support line. and in effect creating, see, we have the double bottom here. See how it came up to the neckline, and then we had that second pump, creating the Adam and Eve, which is a well-known double bottom trading pattern, well known by traders, professional traders and investors. And then when we've already had the first half of this, we peaked out at the channel midpoint when we had the all-time high. And so now I think it's time for us to start working our way back down to the macro trend support line again for the Eve pattern now, which normally doesn't go as deep as Adam, but it could. But it does come back down to macro trend support to shake out all the weak hand holders, the guys that are holding bags that are underwater, perhaps people who are going to buy, who already bought the top of the A wave or fixing to buy the B wave now. We're going to get into that in a moment of where we are. And that's when the floor falls out. We have a terminal shakeout. And I wouldn't be surprised if they use the election results or what happens after the election results, regardless of who wins the election in the United States. I think there's going to be civil unrest in this country, and that could affect the stock market. That could affect the overall economy, and that could be just a catalyst that the market makers need to drive the price down, to have a terminal shakeout, and at the same time mitigate the macro trend support line like it did here during the COVID lows 4 years ago, whatever it was, and then blast off again from there to come up and make the new buying climax, which even if it marks up 500%, which is a third of this pump here that it had back in 21, where it went 1,600%. Even if it goes up only 500% from the macro trend support line, we're talking $175,000 Bitcoin. So I think that is coming. That's inevitable. Six-digit Bitcoin is coming. It's just a matter of how we get there. And like I said, they're not going to just pump it from channel midpoint of where we are right now and make everybody rich. That's not how it works. You think, why don't they just pump it? Why don't they just pump it? Well, because they don't want to upset the global balance of wealth. Too many retailers holding Bitcoin, and these gains right now have not. See, the whole thing is about selling high and then rebuying low. So they generate the liquidity up here to buy deeply down here and then pump it again, and the game repeats. And so that's just how it goes. The game goes on, right? All right, so now on the bottom chart here is the micro chart. I have this on the 30-minute, and this is kind of like a forensic examination of the B wave that I believe we're currently in. And so we have the anchored VWAP as the ice barrier here. If you don't know what the VWAP is, it's the volume weighted average price. You can look it up on Google. It basically it takes the average price of Bitcoin according to volume. So above the VWAP means it has value, and below the VWAP, according to the weight, the value is less. So according to the volume, that is. So here we have the selling climax. So this would be the A point right here. Okay, and then it came all the way up on this Elliott wave here, peaked out here. So we could say like this is the micro buying climax, and then we came back down for the automatic rally, and this determined our narrow trading range that we have in this B wave. Now, my bias is that this is going to distribute. And so how do I have that bias? Well, we see this rising wedge here. We have the 200 EMA. That's this line here, the 200 EMA, which is serving as a pretty reliable 0.5 Fibonacci trading range midpoint as it rides up, and then we see we peaked out here. Now this was a wedge-like pattern here. Wedge-like rising wedges are bearish, but this one went up, and this was a liquidity grab, and it created the horns of the devil as it tried to penetrate the ice barrier, the AVAP, or the VWAP, the VWAP barrier, and it created the devil horns pattern, which just means that there's no value above the volume weighted average price line, and it came back down, even despite all the vertical bar volume that we saw. That just means that in this range, and this could prognosticate the end of this range, ultimate bias of professional interests that Bitcoin has very, very little value above the anchored VWAP line, which was about 64,000. And then it had another attempt here, but this time on zero, basically no substantial demand volume, and it fell through. It fell back through the 200 EMA, and now the 200 EMA on this line here served as a micro trend resistance. And now again we are in a rising wedge, which are ultimately bearish, but not before maybe a bullish pump, kind of like what we had here. People bought here, a lot of people bought here, and then it sold off. And I could see them making another attempt to penetrate the VWAP from this, and then it could go even further depending on the volume that's coming in. Here we see the demand volume and supply volume reducing, and so that usually means absorption. They could be absorbing it here, knowing that if they pump it and the media takes a hold of it and starts touting Bitcoin, especially if we break the VWAP, we're already riding on top of the 200 EMA. So if we break this VWAP line, then people are going to be jumping in. But I think it's going to be just a false rally, and we could even mitigate the highs, 70,000 or whatever. But at that point, somewhere around there, it's going to be extremely treacherous. And I think at that point, smart money will be unloading their positions, and they're going to take profit from all this time here. Remember, we talked about from this buying point, this buying climax, or rather selling climax that we had in December 22, that we still haven't taken ample profit for. We've only retraced 30%. I think that's when retail is going to pay the piper, and professional interests, institutional traders are going to take their money and bring it all the way back down to the macro trend support line in preparation for this next macro bull cycle to take it up to the 175,000 range. So that's what I'm looking at. That's what you should be looking at too. I'm going to continue to look at it. If you get anything out of these videos, I'd appreciate a like or subscription. Let me know what you think in the comments. These are my opinions, not financial advice. But I do look at these charts regularly, and you can look through my chart history. It's pretty accurate. It's Bitcoin in the end will be Bitcoin. Bitcoin does whatever the heck it wants to do in the end, just with the FOMO dynamic and the FUD dynamic. It does. I mean, it's such a beast. But within the framework of it is still governed by Elliott wave. It's still governed by the Wyckoff schematics. It's still governed by trend. It's just deviations are more than what we've seen from like traditional stocks and futures and commodities, just because of the momentum and the money and the liquid behind this thing. I mean, Bitcoin, I don't even know what the total market cap is right now on it. Is it in the trillions already? I mean, I don't know, but so it's a beast of its own. So, but we still have to watch it, and we still know that it's going to obey these because it has to. It has to obey. Otherwise, why play the game? It makes no sense. There's still fear and greed in humans, and it still maps out these reliable Elliott wave patterns and Wyckoff patterns that that have been in identification, been known by traders since the 1920s. It's just a little bit more extreme with Bitcoin. All right, guys, that's enough for me. I'm going to go now, and I hope you got something out of this. Like I said, like, subscribe, let me know what you think, let me know where you're from, and we'll talk to you soon. Be good, have a fun Sunday, like tomorrow, and be safe. Be safe, and we'll talk again soon. All right, guys, God bless, take care, adios, bye-bye.